Gold has officially breached the monumental $4,000 per ounce mark, setting a new all-time high in October 2025. This historic ascent underscores a profound shift in global financial sentiment. The precious metal's rapid appreciation reflects an intensifying flight to safety. This milestone is not merely a numerical achievement, it signals deep-seated anxieties across the global economy. Investors are increasingly seeking refuge from pervasive uncertainties. The speed of this rally has caught many analysts by surprise. The primary catalyst for gold's dramatic rise is an unprecedented surge in safe haven demand. Geopolitical tensions have escalated significantly in recent months. Conflicts in key regions continue to fuel global instability. Economic uncertainties are also playing a crucial role. Persistent inflation concerns, coupled with fears of a looming global recession, are driving investors towards tangible assets. Central bank policies, particularly regarding interest rates, add another layer of complexity. Currency volatility in major economies further contributes to gold's appeal. As traditional fiat currencies face devaluation pressures, gold offers a perceived stable store of value. This dynamic reinforces its role as a hedge against economic turbulence. Ongoing geopolitical conflicts are a major factor in the current gold rally. Regional wars and heightened international tensions create an environment of unpredictability. Investors are naturally drawn to assets historically seen as safe during such times. The threat of broader global instability encourages a defensive posture among both institutional and retail investors. Gold's non-sovereign nature makes it an attractive alternative to assets tied to specific national economies. This perception of neutrality enhances its appeal. Inflationary pressures continue to erode purchasing power across many nations. Gold traditionally performs well in high inflation environments. It serves as a tangible asset that retains value when currencies depreciate. Recessionary fears are also widespread, prompting a cautious approach to risk assets. Equity markets have shown increased volatility, pushing investors towards less correlated holdings. Gold offers a diversification benefit during periods of economic contraction. Central banks globally are navigating complex monetary policy decisions. The uncertainty surrounding future interest rate paths and quantitative easing measures contributes to market unease. This environment naturally favors assets like gold. A significant, though often understated, driver of gold's demand comes from central banks themselves. Many nations are actively increasing their gold reserves. This strategic accumulation reflects a desire to diversify away from traditional reserve currencies. Central banks are seeking to bolster their financial stability and reduce reliance on the US dollar. This institutional buying provides a strong underlying bid for gold. Their sustained purchases signal a long-term confidence in the metal's value. Gold has a long-standing history as a reliable store of value during crises. From ancient civilizations to modern financial markets, its role as a safe haven is well documented. This historical precedent underpins current investor confidence. The current surge echoes past periods of extreme market stress, such as the 2008 financial crisis or the early days of the pandemic. In each instance, gold demonstrated its resilience. Its ability to maintain value when other assets falter is a key attribute. This consistent performance reinforces gold's reputation as a crisis commodity. Investors are simply following a well-established pattern. The current environment provides ample justification for this traditional response. For individual investors, gold's surge highlights the importance of portfolio diversification. A well-allocated portfolio often includes a component of precious metals. This strategy helps mitigate risks associated with market downturns. Institutional investors are also re-evaluating their allocations. Large funds are increasing their exposure to gold as a hedge against systemic risks. This institutional demand provides significant upward pressure on prices. The current environment underscores gold's role as an insurance policy for wealth. It offers protection against unforeseen economic and geopolitical shocks. Investors are increasingly recognizing this intrinsic value. While demand is the primary driver, supply-side factors also play a role. Global gold mining output has faced challenges, including rising operational costs and regulatory hurdles. New discoveries are becoming increasingly rare. Recycling efforts contribute to the overall supply, but often cannot fully offset demand spikes. The finite nature of gold further enhances its appeal as a scarce asset. This inherent scarcity supports its long-term value proposition. Sustained high prices could incentivize increased mining activity in the long run. However, the lead time for new projects is substantial. Therefore, supply is unlikely to respond quickly to current demand pressures. Despite the current bullish sentiment, investors must remain aware of potential risks. A sharp de-escalation of geopolitical tensions could reduce safe haven demand. A robust global economic recovery might also shift focus back to growth assets. A significant increase in real interest rates could make non-yielding assets like gold less attractive. However, current market conditions suggest these scenarios are not immediately on the horizon. The prevailing sentiment remains cautious. Many analysts predict that gold could consolidate around these elevated levels before making its next move. The long-term outlook remains positive, given the persistent global uncertainties. Gold's role as a foundational asset is unlikely to diminish soon. Gold's breach of the $4,000 per ounce threshold marks a pivotal moment in financial history. It reflects a global landscape defined by profound uncertainty and a desperate search for stability. The safe haven appeal of gold has never been stronger. This milestone underscores the precious metal's enduring value as a hedge against inflation, geopolitical turmoil, and economic instability. As the world navigates complex challenges, gold continues to shine as a beacon of financial resilience. Its journey past $4,000 is a testament to its irreplaceable role in the global financial architecture. Stay informed with globalinfoveda.com.